You're so far away.
What's up, guys? All right, this is fun because this is the part. This is the part of the summit where you guys are part. This is kind of like a town hall. So start thinking about your questions. Not yet, but then we'll take your questions for Bill. But this is really fun because we got one of the world's great investors with us. Zillow, Uber, OpenTable. I mean, winner after winner after winner. But what's fun is that today, instead of being one of the world's greatest investors, we have the world's tallest mentor. I was with Bill. We both gave TED Talks last week. We were both in Vancouver. Shameless self-promotion. My TED Talk was released yesterday, so if you want to go to TED, I am at the top talking about philanthropy and billionaires. Check it out. Bill's talk, we're getting a preview because Bill's talk's not out yet, but I got to see Bill talk. This guy has a lot of wisdom for this crowd, and he's got a new book out called Running Down A Dream, and we got a bunch of dreamers here. So with that, Bill, tell us real quick the thesis of your book, because really it's a book for this audience.
Yeah, I've come to believe that there are too many people that are chasing a career that they were pushed towards, thought was the smartest thing to do, and it doesn't necessarily overlap with something they're fascinated with. And we could go into more detail, but the people that are in careers where they're fascinated are going to learn faster, they're going to do more, they're going to run more, they're going to get noticed, they're going to be wildly successful. And AI makes that even more true, because the best that I've seen pick this stuff up and they run even faster. I mean, one negative might be you could see a further kind of separation, like inequality separation. But I do fear there are way too many young people that are grinding for the sake of grinding and achievement, that aren't living the best life they possibly could be living. And I wanted to give more people more permission to do that thing.
What you say fascinating, right? You're fascinated with. How does it, we've all seen like follow your passion. That's the cliche.
Yeah.
Follow your passion. You're using a different word. Is that the same?
No, I actually borrowed the word from Jerry Seinfeld, but he gave a Duke commencement speech. But I think fascination involves work, in that when you're fascinated by something, you're endlessly curious about it, and you just constantly want to study it and know more.
Like a puzzle.
Yeah, and so much of what separates an individual for success is understanding nuance. And innovation is really about understanding nuance, because it's the edge of disruption in your field. And in order to get from the history to the bedrock to the nuance, it just requires tons of reps at this thing.
Yes.
And if you study something you don't like, you get tired. You're like, you have to take breaks. Yeah, everyone's done that in school. Yeah. But when you're studying something you're
like accounting class for most of these people, so right.
Yeah, when you're studying something you love, you just do it on your own. I think one great test is, does it compete with social media or Netflix or something else that you'd be doing in your spare time?
Right.
Are you more there's a breakthrough in your field. Are you more drawn to that almost as a piece of content?
But then how do you nuance that versus the word passion? Because what's the difference between fascination and passion?
I think there's lots of people that could claim to be passionate about something just because they're kind of infatuated with the idea. But if it doesn't then lead to reps and work, then I think it's kind of short-lived. Or there's no motor that's going to accelerate you past everybody else.
Let me. You've probably seen, Scott Galloway went viral, with his career advice, which is like, don't chase what you're interested in, chase what you're good at, and you'll become passionate about what you're good at because you prove you're making money from it. Do you agree or disagree with that?
I don't buy into it, really. And I was actually on his podcast, and we talked about it a little bit. But I don't think there's any spirit to that. Like, there's no... I think when you talk to somebody who's who's fascinated with something, like, you can sense it, you can see it, you can feel this kind of, they idolize the idea of being good in that field, and I just don't think you get that with just, oh, I'm good at this thing.
Right. When you make investments, I mean, you have hundreds of founders coming in front of you every year. Are you looking for that?
You know, I had a chance to interview Bezos once and was asking him how he did so many great angel investments, and he said, because he's busy with that day job, right? He said he just really looks for this kind of unbridled determinism that you can't stop.
Right.
And I think there's an element of that in what I'm talking about. Like, you sense this person is going to be so deep in what they're doing and understand every little bit of it that you have high confidence they're going to be successful. You're often betting on people that are riding new technology waves. And I think for the most part, tech founders are always infatuated. Their fascination is the edge of what the technology can accomplish. And you see people repot themselves. I like to point out Brett Taylor, who we've backed 3 different times. You know, he was doing maps at Google, and then he worked on social media, and now he's running Sierra, which is an AI customer service play. He's just always right there as the thing changes, right, and on top of the next thing.
How is this, you know, you've had a couple of different careers within your career. How is this mindset, you know, how did you apply it to yourself?
Well,
or learn, maybe you didn't, you learned.
So. No, I did. And this, I think, is a really important message for young people. I had a 3-year career as a computer engineer, decided that wasn't my dream job, partially by asking myself, do I see myself doing this 30 years from now? I went to MBA school, I went to Wall Street, worked there for 3 years, had the same discussion with myself, which got me looking in a different direction, went to Silicon Valley, and then I was a venture capitalist for 25 years. Right. So the first 2 things didn't take me to that place. They were stepping stones. They weren't a waste of time. But it's okay to change if you're not there, and the journey to find it can be multi-step.
Your investing career, you know, again, you were one of the very first investors in Uber. You know, just again, dozens of winners. You've seen, you know, you're very good at pattern recognition. How does that apply to kind of this philosophy in terms of when people are trying to figure out what's my thing, in terms of, and especially right now with what is happening with AI, there's all these notes out there. I mean, you know, we got a lot of noise out there. How do we figure out what the signal is?
I mean, I really think it comes down to understanding whether this thing you're tilting at is something that you feel so strongly about that if you, I mean, one thing I find founders sometimes don't recognize, and it's gotten worse in the past 2 or 3 years, you might be doing this 15 years from now. Right. Because a lot of founders have, like me, have ADHD and are like bouncing all over.
We got a lot of ADHD. Let's hear it for ADHD.
But you know, and you start hiring people and you do one round and you do another round, you're kind of pot committed at that point.
That's right.
So I'd really make sure, you know, and ask yourself the question, if I'm still working on this 15 years from now, will I be happy or not?
Yes.
It's important.
Yes. All right, so I'm giving everyone a 5-minute warning. We got a microphone up there. Don't have to line up yet because we don't. But think of your questions for Bill. At what point, Bill, does your fascination become stubbornness? Because there is the other thing is, all right, I can't see myself doing this 15 years. I'm gonna switch. But on the flip side, maybe I'm fascinated by it. But you can be fascinated and push, but it ain't gonna go anywhere. It's just not. It's not meant to be. Either you're not good at it, or it's not a good idea.
Yeah. I mean, I'm probably wildly optimistic that if you're really fascinated and learn it all, that you can make a mark in almost any field. There are obvious categories where talent matters, like pro tennis or downhill skiing, and like you know, in those cases, it's kind of.
We saw Michael Phelps was here yesterday, and he's like, I worked harder, and there was no doubt I was going to be the best in the world. I can work as hard as I want. I was never going to even, you know, be within a minute of him.
But I've seen him talk, and that work ethic that he had was only possible because he cared enough to go do it. And anyway, one thing I would say about those jobs, though, whether it be Olympic sports or Hollywood, there are so many support jobs around that individual job, and many of the profiles in my book are those types. There was a woman that all she could think about was movies, and she didn't see herself as an actress, so she went and got a normal degree and didn't ever consider it. Later she found out, oh, there's hundreds of people that surround this individual talent role. Yep. And she started as an assistant at an agency and then ended up becoming one of the biggest agents of all time. So there are areas around these talent jobs where there's tons of other jobs. Sports analytics is another one that's a growing field.
Hot area. Who's the person in your book you think is most relevant to the 30 under 30 community in terms of a story that they can relate to?
I think I can get that. So I have a chapter in the book titled Embrace Your Peers, where I encourage people to create peer circles as they're rising up, people that are on the same rung of the ladder as you. And there's a great story. This guy, Jimmy Donaldson, 17, loves YouTube, trying to figure it out. There aren't that many people that had figured it out. He creates a group of three other like-minded people, claims they were on Skype 16 hours a day for 4 years, and they all became millionaires. Jimmy's Mr. Beast.
Okay, that's good. That'll work.
And so, yeah, I think, co-learn. And then he would go on to say that he used Malcolm Gladwell's 10,000 hours thing and said this isn't precise math, but he said we got 40,000 hours because we're all learning independently and sharing. And
the hive mind version of the Gladwell,
Yeah, and people get overly worried that they have some kind of proprietary knowledge or that sharing is not in their best interest. And I'm completely on the other side. I think
you're full open kimono.
Yes, yeah. Ideas are a dime a dozen. The more you share, the more will come back to you.
All right, that's a great point of view for this group. What's the biggest mistake either you've made in your career or somebody in your book that you think was the most instructive?
Well, the biggest mistake I made in my career is when I was 3 years into the venture capital business, I met Larry and Sergey at their office with 25 employees. They pitched Benchmark, and we failed to invest in the
Google,
company.
that name,
So that's about as big a mistake as you can make.
What was the valuation when they were pitching you?
They ended up doing the deal at 80 pre with Kleiner.
80 million pre.
Yeah.
Now what's the market? 3 trillion.
Yeah.
So.
Huge mistake.
Oops.
I'd like to think it kept me motivated for the next 22 years.
What's your favorite investment ever?
The one that had kind of the most intellectual appeal was probably Open Table, because we invested when there were 3 restaurants on the network and had a theory that a network effect could take place where it could tip towards winner take most.
Yes.
And I remember being on vacation in Bali and going in a restaurant and seeing the unit there.
Yep.
And 20,000 restaurants later, and just the fact that the idea played out in the way that we had anticipated
very satisfying.
Was powerful. Yeah.
Very satisfying. How much? If folks want to ask questions while you start lining up, in terms of how much have you invested over your career? I mean, it's a lot of checks. So how much have you put to work?
Oh, I've never tried to add that up, actually. And to be fair, my firm focused almost entirely on first money in, early stage. So relative to the other venture capital firms,
right,
we've always deployed much less money. We've
less
never
money and higher, higher leverage.
Well, you got a long line.
Bill, look at that. We got 10 people already. So, all right, here's the deal, guys. No pitching, yes. People go crazy to get an audience with this guy. So no pitching, just asking. And go. And identify yourself, but quick. Don't need the whole who you are, what you do in 10 seconds, and then the question.
Hi, Bill. I'm Janae Crum, a dual career real estate agent here in Phoenix, project manager and also a realtor. I've heard a lot of people talk about what you're talking about, don't end up climbing the wrong ladder. What would your advice be for someone who's 29, kind of at the juxt of going full in project management, full in as a realtor, not climbing the wrong ladder?
Yeah. Well, I wrote a book about it, so you can make sure you get a copy. I'd really, Angela Duckworth has this phrase. She says, move towards warmth and nutrients. Like, I would really ask yourself, which of these things pulls at you the most? Like, which one are you really most curious about? And one thing you could do in any of these situations is just role play. So spend a week telling yourself it's definitely going to be this one thing, and study that week, take notes that week, and then the next week tell yourself as a game, I'm only going to do this, and then do that. And then after 2 weeks, I think you'll probably have a good point.
So it's an A/B test.
Yes. Yeah, your own A/B test.
Thank you.
Hi, Bill. My name is Prak. I'm building an AI drug discovery startup using an NVIDIA award-winning AI model and mini brains called organoids to accelerate drug discovery for Parkinson's, Alzheimer's, and other brain diseases. And I just wanted to ask you, because I'm obsessed on LinkedIn and looking at venture capitalists' outlook on this industry, and a lot of them seem to agree that using technology for health is the next trillion-dollar industry, and it's the next boom. And do you agree with this thesis, and how do you think this plays out over the next couple decades?
That was only slightly selling himself.
Yeah, but one, I do agree to a caveat. I've not been a healthcare investor, and there are plenty that are, so I'm not the perfect person to ask that question. But in the past 5 days, I'm sure you read the pancreatic cancer stuff that came out. Like this, and at TED this was talked about. The woman from the Arc Institute was there. So I think the world is your oyster. Everyone agrees. I don't think there are any skeptics.
It's a good time to be young and entrepreneurial, so good on you. Good luck.
Great category.
Next up.
Hey, Bill. I'm Steve. I'm a partner at Antifund, also a venture capitalist. We're investors in AI, consumer, and hard tech. Question for you. It seems like you've made a lot of investments in the consumer tech space, Zillow, Nextdoor, Uber, Stitch Fix. Very curious, what are some interesting consumer demographic trends that you are observing and noticing that is maybe coming with AI?
Demographic with AI, that's combining a lot of different things. There are a number of people that are trying to use AI to make the decision on behalf of the individual. Part of what happened with the internet is we categorized everything you could possibly buy, and now you have the paradox of choice and all this stuff. So how do you, and people are, we're doing this at Zillow, people are doing it in the travel space, people are trying to figure out how you could custom package things for people. I think the unfortunate reality is there is a bit of an inequality thing happening, and so the other thing you see is people target the high end of the market more because there's more disposable income. By the way, real quick on the healthcare thing, especially because you mentioned Parkinson's, one sad reality is pre-AI. A lot of drug companies end up focused on symptom support rather than solving it because there's more money in that. And unfortunately, that's less, it'd be much better if we cured the disease. Yeah. I don't know why I thought of that. Sorry.
Good luck with your portfolio. Next up.
Hi, Bill. Nice to meet you. Appreciate you being here.
Yeah.
Madeline Hilliard. I'm the founder and CEO of Dopa GE. We do overdose prevention and substance misuse training video games and other products around this. I'm curious, you know, kind of the older wisdom is if you have a product that's valuable, don't give it away for free. But now with AI that we can be creating and releasing new products so quickly, and a lot of creators online are kind of giving away education or other products for free as kind of top of the funnel. Are you seeing this with your portfolio companies? What would your advice to them be on free or charge?
We've done it all. I mean, a big part of why my firm backs so many open source companies is because the product got out there and became a top of funnel way to get users in. I think you have to, I had a conversation with the guy running the New York Times once, and he was thinking this way. And I think in their case it was flawed because the people that love the New York Times, it's almost like a wall. They'll pay this much, and you could lower the price and it doesn't really increase their distribution. So you have to understand the target market and the end market. And by the way, if you're going to do the freemium thing, it's got to be really big, right? Because, you know, otherwise you're going to have a hard time funneling it down. So I don't know enough about that particular category. The other trend you might be interested in is a number of companies have been able to get consumer apps available for reimbursement on insurance claims, and that's obviously very good if you can make that happen with a product like that.
All right, I see a lot of nodding. Done.
Hey, Bill. How's it going?
Good.
My name is Jay Ives. I am a CEO and founder of a growth marketing agency in New York, Jives Media. And we're also currently working on AI CRM, which I'm pretty stoked about. I know that you've made a few sound investments over the years. And my question is, what are 2 or 3 things that you really look for when investing in a founder? Not just a company, but a founder.
Yeah, so I think that determinism Bezos talked about, sales ability. You're selling so often. You're trying to close people, close investments, close deals, close customers. Like whoever the founder is represents the company. And I've seen people that have 10x sales ability relative to someone else, and it really matters. And then lastly, and this kind of relates to the founder, but more the company, and relates to the question just before you, many of the best outcomes we've had, the company has some unfair go-to-market advantage they've come up with. So some way of getting customers that's not rote advertising or rote salespeople. And because if you can figure, you know, there's this whole product-led growth, you know, meme, like that stuff really matters.
Cool. I really appreciate you.
Yeah, good luck.
Hi, Bill. Thanks for being here.
Yeah.
My name is Thor Weber. I'm the founder of SkillDome. We do AI tutors. My question to you is around defensibility, and specifically the question is there any defensibility left in software?
I think it partially depends. I would probably, if I had to bet on whether what do they call it? SaaSpocalypse is overdone or not, I would say it's probably overdone a little bit. But I'm always been a big believer in Warren Buffett's be greedy when others are fearful and fearful when others are greedy. But I do think the category matters. If your product was, you know, helping someone translate it from here to here, the AI can do that. If you're a system of record on finance, I think it makes no sense whatsoever that you would vibe code your own financial ledger. The auditor needs to be able to see this thing. It needs to be quite deterministic. And so I think the software that's safer is one where there's a need for deterministic data. And then you can use that data to reinforce whatever the AI model is. But other people are talking about this. I think people are kind of down on workflow and more optimistic about data centricity. But the truth of the matter is you have to know what AI can do in your field. And it goes back to this curiosity thing. Because if you're not scared to death that you lack the knowledge of exactly what AI can do where you play every day, you might get run over.
Well, fear, scared to death, but also to your point about curiosity and being fascinated, if you're excited about it, you're going to be the one
You probably are.
disrupting
You're
because
probably
you've already
already
figured
there.
out how to hack it,
Yeah.
right?
I mean, I think I don't know where I said this, but like most of the founders I know, that weekend OpenClaw came out, they ran and bought a Mac Mini and popped this thing up just because they didn't want to not know what everyone was talking about. And it kind of requires that mentality. And you're right, if you're curious, that happened innately. If you're telling yourself, oh, I should be doing this,
Probably behind.
you're a step behind.
That's right. Appreciate you. Thank you.
Thank you.
Hi, good morning, Bill. My name is Anurup Kumar. I'm the co-founder of Infect Digital. It's a growth marketing firm, and also the co-host of the Culture X Commerce podcast. Big fan of your work. One of my question was on network effects. One of the first paid gigs I had was as a campus ambassador for Uber when they had made its go-to-market in Tucson, Arizona.
Yep.
My question was around when you see founders that, let's say, have had successful network effect motions, OpenTable, Uber,
Yep.
versus those you've seen have maybe not been able to execute. And so, what were some of the key differences that you saw?
I actually think that you can impact this a little bit, and I probably should have written more about it. But imagine a graph where on the horizontal, on the vertical axis, you have value to the customer, and that could be either side of the marketplace. And on the horizontal axis, you have penetration in the market. You want that line to go up, and so how does the 10,000th customer have way more value than the 1,000th customer? And how can you make the value function for what you're doing dependent on the variable of how many people are in the system? And I do think you can move that line around a little bit. It's in certain industries, it's stronger form, some top out. I always, when Amazon launched Mechanical Turk, a lot of people thought that would have a network effect. But I think if you aggregate 100 people that can do a commodity job, the line kind of levels out. If you had 100,000, it doesn't really change the quality of the work that much. And so, thinking about industries where that line keeps going up, or the steepness of it, is what you want to pay attention to. But I think you can also come up with ideas that tilt the line.
Thank you so much.
Yeah,
Appreciate
good
your
luck.
contributions. Thank you.
Hi, Bill. So my name is Kira, and I'm a Salesforce software engineer at ANZ Bank in New Zealand. So my question is, in markets
The
like...
Kiwis, you've come the furthest of anybody this whole summer.
Literally, yeah, 12-hour flight. But in markets like New Zealand, where scale is very limited, we're geographically isolated, tiny country, what's the most overlooked way to build a globally competitive company?
Did you understand the question?
To build a globally competitive country?
Company.
Sorry. So
Yeah.
how she is literally on an island.
Yeah.
How does she use that remoteness to her advantage?
Well, there's a chapter in the book titled "Go Where the Action Is," so this would be the antithesis of that.
Yeah. Unless you're like Lamb.
The answer is going to have to be in virtual communities. Like, you're going to have to get plugged into the appropriate Reddit group, or linked. Like, you're going to have to build, like Mr. Beast did. You're just going to have so much connectivity. And I would go overboard on the peer stuff if you're isolated, digitally, but I would want to create as many people I'm connected to digitally through Signal groups, WhatsApp groups, Reddit groups, maybe set up a Discord server of your own, but like you want to be the most virtually connected person you can possibly be.
Plus, take advantage of the time difference when they wake up. They always have a note from you, right?
Yeah.
Good morning, Bill. My name is Maria. I'm building my own app that helps with paradox of choice. Basically, it's a recommendation engine that helps connect users to what product to buy based on their preferences and data.
Yep.
My question is, how do you assess the difference between like founder quality and like market fit?
Well, market fit for the...
Or essentially like how strong the market pull is versus like the founder quality. Sorry.
Yeah, I mean, ideally you have both, right? But I've seen we've funded many situations where Discord was a failed game company, as an example, and this was the product they built after the fact. And Slack was famously that way. So great founders can navigate failed products. And the truth of the matter is,
WhatsApp too, right?
Yeah. So when you're launching something, you just don't know really, and so that's why I'd give the tilt the other way.
Just got to be in the game, and then you figure it out, right?
That's true.
The start. Thank you.
Okay, thank you.
Hey, Bill, good morning. My name's Andy Neisser, and I'm a fractional go-to-market engineer. A lot of people who are my age are operating in this fractional capacity, managing several client engagements, wearing multiple hats, and building solo practices. From a leadership perspective, how do you think about decision-making and maintaining conviction in this career path? And how do you avoid diluting yourself across too many things?
Yeah, I would, I have two reactions to that. First of all, I think it's a wonderful idea while you're trying to discover. There's a anecdote in the book that one of the guys that's part of the Acquired podcast, he had a thing called a side hustle. So he'd show up at a job and ask his boss, do you mind if I do this on the side in my spare time? And that launched Microsoft Garage when he was at Microsoft, which connected him to the entire venture community. He got an offer to go to work at a venture firm, which he thought he might like, but when he got there, he said, can I launch a podcast on the side? And they said, sure. And that ended up being the thing he loved. So doing multiple things is a great way to A/B test or experiment.
And A/B test what you're fascinated by.
Yeah. I don't know how many Steve Jobs and Elon Musk there are in the world, so assuming you can be that, I would say is a bit aggressive. I think if you want to really dent the world, you probably want to find a single lane at some point in the future.
How many people out there have a side hustle going on? Raise your hand. A lot. Good for you guys.
Thank you.
Hello, Mr. Gurley. My name is Tiffany Johnson, and I'm an MD candidate from Stanford School of Medicine and the founder of the Med Bubble, which is a mental health platform for physicians and healthcare professionals. So my question is surrounding, as a woman founder, I know females still receive a disproportionately smaller share of venture founding, and given the bias and pattern matchings in VC, how would you advise women founders present themselves in fundraising conversations so they are seen as both highly credible and highly upside without feeling like they're not someone they're not or less authentic?
Yeah. I will tell you, from the time I entered the venture career to the time I left, this moved materially. It's still not where it needs to be, but progress has happened, and there are a number of female founders and female VCs that have created their own community groups like I've been talking about, and I think plugging into those, getting exposure to those, would help you feel more confident about what you're doing and seeing more success stories. I've always felt strongly in these situations that you want to combine attention on the problem with attention towards success stories, because part of the issue becomes a pipeline one of how you draw more people in. And so, there was a point in my career, I think, where I was on 10 boards and 6 of them had female CEOs. And so, I don't say that, it wasn't intentional. I was backing the best people I possibly could. But this has been improving, but we should keep tilting harder against it.
Thank you.
Thank you.
Hi, Bill. I'm Sarah Romanko. I'm a VC. Once again, thank you for speaking at our event during South by Southwest. My question is, how do you think about allocating your time between the demands of active investing and the things that don't have an immediate ROI, like mentoring founders, doing writing, speaking at events, and how has that changed over time?
Yeah, this is a really hard question. I mean, to be a successful venture capitalist, you have to be deathly afraid that you didn't look under a particular rock, and there's infinite rocks, and so it's a hustle job. I've always said it bends towards youth because of this hustle element. And there's another element that's why those other things are important is you need to differentiate yourself as a brand. And so if you're not doing any of the development work around content or speaking or whatever, it's kind of hard to get known for what yourself. So I don't know that there's a formulaic response to that. I really don't, because I think it's just make sure that you're 100% fascinated with being a VC, because you need to run as fast as you possibly can. I actually posted 2 weeks ago a letter I wrote called "So You Want to Be a VC" on my Twitter account that I had kind of distributed privately, but now it's public, so you could go read that as well.
Thank you so much.
Yep.
Hey, how you doing?
Good.
Randall, thank you for hosting. And Bill, I'm so grateful. We're so grateful that you're here. My question is, well, first, my name is Dante Tyler. I'm founder of OQP Solutions. We are a cybersecurity and now AI governance company. And my question to you, Bill, is as AI gets embedded deeper into products, how much weight are you putting on founders' data governance and security posture during your due diligence? And do you see that becoming a hard gate when you making investments?
I think if I understood the question is, have I seen venture capitalists use or worry about security as part of their investment evaluation?
Yes.
Yeah, I have not seen that. It doesn't mean that it won't happen in the future. I think the thing that would cause it to happen most is if some hot startup, ran into an exposure and then got, dislocated as a result, which would push more people in that direction. If those incidents spike up, I think you could see that. But it also depends what stage you invest in. I've mostly done early stage stuff, 2 people and a PowerPoint. The product doesn't exist yet, so there's not much to go test. But other investors do a lot of later stage things, and they would probably be much more concerned.
Thank you.
Thank you.
Hey, I'm Dennis Zonologia. I'm from Dallas, Texas. I started a small private equity shop. We focus in B2B services and healthcare. My question for you is, if AI commoditizes software, what markets would you chase from an investment thesis, and which ones would you avoid entirely?
Yeah, so, the earlier question hit at some of this. To the extent that the unit of work can be completely automated with an AI agent, that'd be a dangerous place to be. But I don't know exactly how many of those things there are. I think there are many places where either human touch or human judgment are going to be valued by the customer for a very long time. I think there was someone at TED talking about the fact that the number of radiologists has gone up, not down, despite the fact that you can read these things so much faster. I do think, from a PE perspective, if there are ways you can accelerate the customer experience and customer delight in an industry leveraging AI, that delta of how much you can move that would be something I'd be really focused on. Because then the customer's like, oh, I don't want to go to the, I'd rank that higher than, oh, I'm going to take a bunch of cost out. Like being able to wow the customer in a differentiated way can create word of mouth, and it could give you a much better outcome.
Okay, and what makes you confident in that?
30 years of experience?
Yeah.
No, that's my answer.
Yeah, I agree. I think it's, when we build our advisory board for platforms, we hire advisors, right? They have experience. They've kind of seen markets shift over times. And so we leverage that with the new age models. So
Good stuff.
Awesome.
Appreciate you.
Hi, Bill. My name is Trinity Carnell. I'm in the process of developing my own app. It's a health and wellness app geared specifically towards corporate women. And my question for you today is, based on all the successful pitches you've experienced throughout your career, what are some of those components that you tend to see that draw venture capitalists like yourself towards newer apps or companies in general?
I mean, unfortunately, people probably won't love this answer, but, well, I'll give you two answers. One, they watch the leaderboards, like they really do. So, like, getting early success, that's maybe a reason to do the freemium thing. Like, the more something's sucked up, they pay attention to that a lot. The other thing that they might pay attention to is personal experience. So to the extent that they become a customer and are wowed by the experience, that's another thing. I think people broadly misperceive that venture capitalists are solely looking for an ROI outcome. They have limited capacity on investments, and they really want to fall in love with a project. And so you have to have a connection with what matters to them, like personally, or what they're thinking about, and so that they're going to give up one of those slots.
Okay, thank you.
Thank you.
Hey, Bill.
Hey.
Hey, so I'm Dave again. I started my own sort of VC firm called Inception Capital that we started about 3.5 years ago. We focus on first institutional checks into opportunities in the emerging markets, focus on financial infrastructure and AI automation. So I know there's a statistic out there that 80% of funds actually don't make it to Fund 2. We raised about $80 million 3.5 years ago. We're about to start our Fund 2. What advice do you have for aspiring VCs like myself that are looking to raise their second fund as to like what we should do and some of the things that we should avoid?
Yeah, I mean, I've heard this problem come up and people talk about it. The biggest, this is probably completely unhelpful, but the biggest thing, early liquidity, is the thing that's most valuable. I think going to market on Fund 2 with zero liquidity events is tough. And then, you know, outside of that, they're going to look at markups. They're going to look at how successful you are in getting people to follow you, and the quality of those people that followed you into these companies. That's what the LPs are going to pay attention to.
Okay, thank you.
Yeah.
Hey, Bill. Thanks for being here. My name's Noah Wolfson. I'm an agent in our creators group at United Talent Agency. One, who was the agent that you were referencing earlier? And two, I love Super Pumped. I watched it. I thought it was great. What's one of your favorite stories that you love to share about your run with Uber?
What was the first question?
Who's the agent you referred to, the Hollywood agent?
Oh, Lori Bartlett. There's a chapter in my book on her. So the book's divided into stories and profiles and principles. So that there's a whole chapter in the book on Lori. Right. What's some of? Oh, you know, probably on Uber the intellectual battle I had with the NYU professor about the size of the market. I don't know if you're familiar with that or not, but he came out with a huge piece that said Uber would only be worth $4 billion, and I spent the weekend writing a retort called "How to Miss by a Mile." That it's about 25 pages, so you could go read it. But there's a classic TAM analysis mistake people make. Yeah, so that'd be it.
Awesome. Thank you.
Yeah.
All right, got a minute or two left. See how many we can get in. Whoever, if you're at the end of the line, let's cut the line off. If you're at the end of the line,
no chance.
We'll make sure that you're the first online at the book signing, and you can probably ask your question one-on-one. We'll give you advantageousness there. Go on.
Hi, Bill and Randall. Nice to meet you. My name is Destiny Brad. I am a CEO and founder of a local company here in Phoenix. It's called Girltivities, and basically the premise and our mission is to provide a safe place for women to connect and to come to alone, to meet other friends while doing fun activities. We change theme every month. And we've had a lot of success over the last 4 years here in Phoenix, and I've really been considering like my next steps as far as scaling and growth. And my question to you, Bill, as a venture capitalist, is do you believe that all businesses or most businesses need funding in order to reach next level of success? And if so, how do you know when is the right time for that?
Yeah, I would probably, I'm glad you asked this question. I think if I were talking to a huge group of entrepreneurs like this, I would warn more people about not taking venture capital. And what happens typically is after you do an A, you do a B, a C, a D, and you can build an Excel spreadsheet on what this looks like, and while you're giving out stock to employees. And very quickly, and almost in a flash, before you know it, your founder's equity goes from 90% to 10. And I've watched it happen over and over again. And the world wants to do more M&A in the 20 to 100 million tuck-in range than they want to do billion-dollar exits. And your equivalency is, once you take all those rounds, is to get to this much harder to get to place. And so I would generally warn against taking venture unless you're way certain this is a really big outcome. And I'd find a way to use hustle and sweat equity. There's a great story in the book. There's a gentleman named Burt Beveridge who was a seismologist undergrad, worked in oil and gas for 10 years, got scared actually because he was in Latin America, things got dicey, became a mortgage broker for another 10 years, and then one weekend convinced himself to launch a vodka company named Tito's, which he owns 100% of. Yeah. And I think it's doing $400 million a year in free cash flow. So anyway, I'm glad you asked that question.
Thank you for your time.
Great. All right, I think that's it. Hold on. So you got, how many people we have online there? 7? All right, you're the magnificent 7 there. If you go over to here, I'll make sure you're the first online for the book signing. You get a book and a private little quick chit-chat with Bill. So there you go. Lining Up has its privileges. So go over there. I'll make sure you guys get taken care of right by there. Meanwhile, for the rest of us, what a great masterclass that was. That was awesome.